The host of Wall Street Week, David Westin, joining us as he does every day at this time. And David, a lot of talk here about the regional banking crisis, but also about some of the actions that regulators took in the early days of that crisis and whether it was warranted.
Exactly. We've been hearing from Jamie Dimon with the big banks. He said maybe some of the smaller banks have a harder time. Certainly one of them was Signature Bank, which is a New York State chartered bank. And the person responsible for that bank, Adrienne Harris, is the superintendent of the New York State Department of Financial Services. We talked with her earlier today about exactly what went wrong there and whether they can avoid it in the future.
The problems we saw were with liquidity, but the reports of examination flagged these issues for many years, and bank management just really failed to respond to them. So I think in addition to having bank management responsible and making them respond quicker, I think regulators are thinking a lot more about their own processes and how to tighten that feedback loop with banks.
Do you have the capability of making them pay attention to you? Because as you say, you'd flagged this issue before, but they hadn't really moved on it, as I understand it.
Yeah, we absolutely do, and I came into the department about 20 months ago now, so we're going to be exercising those authorities a lot more.
Is there going to be more bank supervision in the light of Silicon Valley Bank and then Signature Bank and First Republic?
Yeah, I think we're looking at liquidity. People are looking at interest rate, risk management, commercial real estate, and again, this feedback loop between the regulators and the banks to make sure that responsiveness is there and clean and crisp is going to be really important going forward.
Do you have the resources you need?
We don't, and I think a lot of regulators have flagged this in their reports after the failures of SVB, Signature, and then First Republic. But we put in place, when I first came in, a 5-year staffing plan. Last year, we were able to hire 200 people. We got the department fully funded for the first time in its history. We hired the first new class of examiners last year, but we've got a lot more work to do to make sure we're properly resourced.
How many people do you have now, and how many people would you have if you had the necessary resources?
So right now, we're about 1,200 people. Really, in an ideal state, we'd be 1,800 plus.
Wow. And how do you attract those people? That's a lot of people to hire. 600 people who are bank supervisors and examiners. That's a skilled job.
Yeah, absolutely. I mean, one of the things we're looking at now is compensation inside the department, and all regulators are facing this. The FDIC flagged it in its report as a review of Signature as well, but making sure people are aware of the mission, the important work that we've done. That's why we had so much success, I think, last year, hiring 200 people, promoting almost as many members of our team, and we're just going to keep at it.
Are you a net drag on the budget, or actually do you make some money for the state?
We make quite a bit of money for the state, so we are fully funded by assessments from industry, not taxpayer dollars. And then we net the state about $1 billion a year through enforcement actions. On top of that, we also get a lot of restitution for consumers. So last year we got about $154 million back in New Yorkers' pockets, which is a great accomplishment.
What is your perspective at this point on regional banks? Is there a structural problem, a business model problem with regional banks?
No, I think those banks are so important for the lifeblood of their communities. I mean, one of the great strengths of the American banking system, and it remains so resilient, in part because we have this great diversity from CDFIs and MDIs, regional banks, and then, of course, the large banks. So it's really important for our economic activity.
Are we going to see more consolidation at the regional bank level, do you expect?
I think we'll see some natural consolidation, and that's healthy. And I know the federal government as well as state regulators are looking at merger policy to make sure those mergers are helping keep the system safe and sound.
How do you monitor whether you have banks that are in the yellow area, if not the red area? How do you know how dangerous things are getting for the banking system?
Yeah, well, first, it is important to note the system is strong and resilient. It's just really a credit, I think, to regulators and to the banks themselves that we've been able to contain some of the issues that we were seeing in March. So the system remains strong and resilient. But we, of course, are monitoring banks all the time. Regulators are remaining vigilant, looking at liquidity, looking at things like uninsured deposits to make sure that the banks are healthy.
You mentioned crypto. You've been out in front, actually, on crypto licensing and also some enforcement actions. Where are you in your plan to regulate and license crypto in New York?
Yeah, so DFS is the only prudential regulator in the country with crypto-specific authorities, and we really have been leading the way with regulation, with guidance. We've built a team now of almost 60 professionals, very diverse backgrounds. We've brought enforcement actions, as you've mentioned. So we really have all the tools, from licensing and very rigorous standards to supervision, examination, and then enforcement. And there are federal regulators from other countries, foreign jurisdictions that come to us all the time for our expertise. We're deeply engaged with the federal government as they look to put a framework in place there as well.
Does that attract crypto to New York, or does it drive it away?
It attracts it. It's really amazing. If you look at the amount of crypto investment over the last few years, the majority of it has been in New York, and it's because we've got this transparent, clear, rigorous framework.
Transparent, clear, consistent. What can we do to make sure, from a crypto point of view, I don't have a series of different regulations around the country and around the world that are contradictory, if not confusing?
Yeah, it's a really important question, one we're facing now in New York. We want to make sure you have one set of rules. If the feds will come along and put a framework in place, and I hope that they do. We want to see that act like banking regulation does, where there's a strong federal floor and then states have the ability to exceed that. And as I said, we're deeply engaged in those discussions, making sure we can preserve that dual pathway, but transparently and not create confusion.
What's the biggest challenge you have right now and the biggest opportunity? Because often they come together.
Yeah, I think it's really taking the opportunity to modernize our supervision, not just in banking, but across the diverse set of things that we regulate.